Welcome to Local Business Spotlight, everyone. I'm Troy Thompson. I'm over here with the man himself, Mr. Morgan, from Hill & Hill Financials. And today we're talking all about tax deductions when it comes to charities. And I think that's super important. How are you, my friend?
I'm always good. Good to see you, Troy.
All right. This is something we have talked about before, but I personally also get a little bit confused.
Sure.
If you don't mind me saying, and I'm sure the viewers at home do as well. What is a charitable deduction, okay, or disbursements for your taxes every year? And how do you go about doing that? And what happens when you do it? What benefit is it to you? Apart from feeling good that you've helped the local charity.
Yeah, one of the things that we've talked about in the past that I want to highlight again is something called a qualified charitable distribution. But a couple of years ago, in I believe 2017, when President Trump was elected, they made some tax code changes. And one of them kind of set the stage for some major changes which happened in January 1st of 2020 called the Secure Act. Well, one of the things that got a lot of press was this thing called a qualified charitable distribution. This is where you can donate directly out of your IRA accounts, these retirement accounts, direct to charity, and you don't have to take that distribution yourself. You can donate it directly and avoid having to take a mandatory distribution and pay the tax on it. The reason, real quick, that this was important is in 2017, when they changed the tax laws, the deductions that we often would get for donating to charity didn't really add up as much as when they have this standard deduction that came out. So people said, well, I'm not going to donate to charity as much because I don't get the deduction like I used to. So now you can donate directly from your retirement account to a charity, a 501c3, not have to pay the income tax on that distribution and help a worthy cause that you believe in.
Okay, I just want to be clear on this. Now, this is for people who have retired that you're talking about.
And have actually hit the age of 70 and a half.
Exactly, because I'm thinking, could I dip into my IRA and start donating to charity? But we've always been told, and I don't want to say that's a sweeping statement, to just reinvest your distribution.
And when people start taking distributions from their IRAs, it's mandatory now at 72.
Right.
You can start donating to charity at 70 and a half. You certainly could take it once you hit 59 and a half. I know it's a lot of ages and numbers, but what you want to think through is what is the tax and giving strategy for you and your family, and have a plan. And most people go, I never heard of the Secure Act. I didn't know that a qualified charitable distribution even existed. I didn't know all the ages and the times and the dates. So we just encourage people to know that information and to have a tax and giving strategy if it's appropriate for their family, according to their wishes.
Okay, for people sitting at home that aren't clients of yours, where would you direct them to find out about the Secure Act to begin with, instead of just calling you and asking for information? Because then they can come to you once they've found out and say, hey, Morgan, we need to reassess what I'm doing.
Sure. I think we can all laugh when we say the internet is the last bastion of truth, but there are actually some good websites. If they just Google search the Secure Act 2020, there's really some good websites that will give you the highlights of what was in the legislation.
All right. Look, we don't like talking about it, everyone, but there is on the horizon maybe some more tax situations coming. What are they? What have you heard?
There's a lot of discussion about tax increases. If you make over $400,000 a year, if you make over $1 million a year. What I share with people, regardless of one's political affiliation, is what I sometimes call maybe unintended misdirection. The news headlines will tell you, don't worry because it's not you.
Yeah.
But there are a lot of details that we need to go through to make sure that you're protected from any tax increases.
And we need to give you a call about it.
Absolutely.
We appreciate you. If you want to find out more information, there it all is up on the screen for you. Hill & Hill Financials.